everybody, and welcome to another episode of Sussex. Today I bring someone very special to you guys. This is Natasha Bass. She is a local realtor. She's an agent in California, and she is amazing. Natasha comes with a huge background, great work ethic, and she has a lot of information I'm hoping she could share with you guys to provide you with some content to move forward with your opportunity to buy your first home. Tasha, thank you for sitting with me.
What's up, Shelly? Thanks for having me. Appreciate it.
Of course. So I'm doing this because I know there's people that are in the process, or maybe they've been thinking about it for a long time. A lot of people have the goal of getting into their first home. Mm-hmm. So if this is someone that's sitting out there watching this right now, what are some of the first steps that you should take to get into your first home?
The first step I would encourage somebody to take is, first of all, making sure your credit is intact. You can't get a home without having a specific score. I've seen and heard that you can get it as low as 580. Typically, the average score to get into a home is about 640. So that's what I would definitely encourage somebody, is to make sure their credit score is intact, or you're at least working to get those things, and get with somebody who can help you if you're not familiar.
Most of us understand like credit is like, to me, I look at it like it's an adult, like, what's the things we used to get in high school?
Report card.
Exactly. It's like, I'm having a report card in years. So
yes,
that's how I
is.
look at that, right? So
is.
it goes in a sense of telling you, like, if you're responsible, if you take care of things, if you're turning things on time or paying things on time. Now, I know with that, like, there's also two different types of loans that we're usually seeing with this. So which loan is like more targeted based on where their credit score is and how they are financially?
So FHA typically is okay with having the lower scores. That's where you'll see the 580s or the 640s. That's usually your FHA. The conventional, they require a higher score. FHA, the reason why too is because they're first-time homeowners, so they're trying to help them get an opportunity to get started. However, your interest rate will typically be higher because the lenders are taking a chance with you, right? Mm-hmm. So in addition to some of the beginning things that I would want a client to know when first initiating home purchasing is the having 2 years worth of work history, and just knowing what to bring to the table. But that's to get pre-qualified.
So we're talking W-2s, we're talking taxes, pay stubs, just whatever you can do to show that you are an established person and you've been committed to your job and things like that.
Exactly.
Okay, so now we're getting credit checks. Now we're checking to see if you're qualifying. What's the process now? Somebody has ran their credit, they're going to the bank. What determines like the amount of money that they get, and what can they look forward to?
So they look at the debt to income ratio, how much money they make versus how much debt they owe. And then they factor in your credit report, your credit history. That's why they need the pay stubs and things like that. 401k always helps. If they have a 401k, that shows that they have access to more money. Okay. You know what I mean? So they factor that in as well. And so that's how they determine.
Well, I know some people would be concerned that, like, within their credit, a lot of people are like, well, I have this extremely high car payment. I have these credit cards. Are there certain things on your credit that don't determine if you're going to be able to get, when you're talking about income to debt ratio, that's going to determine like, hey, because a car is a necessity, correct?
Right.
So are there certain things that are like on your credit that are not going to be a determinant factor that if you're going to get approved for the loan?
I would say no, because everything on your credit, it affects your overall scores.
Okay.
Now, a lot of people may not realize, like, your PG&E, your utility bills, those are not included in your credit report.
Okay.
So they don't factor those things in. However, if you have like in shape, right, and you're paying that monthly bill. I remember when I first bought my home, I had an in-shape bill, and they factored that into my debt to income ratio. However, that doesn't show up on my credit report, right? But because it's a payment and it's a consistent payment.
Recurring payment.
Yes,
okay. And for you guys, I'm not familiar, in shape in the town that we live in is actually like a gym. So what she's talking about is if you guys belong to a 24-hour fitness, a crunch, or whatever's in your local community, she's saying that was actually factored into it. So that's one of those things. Now, I see a lot of people talking about cost or hidden costs that they didn't know that they were going to occur during this process. Mm-hmm. What can people expect to see?
So when you're purchasing a home, one of the things you got to keep in mind is you have to get inspections done. Inspections make sure that the home is qualified for you to be able to move in, if it's safe and things like that. And the buyers usually pay for those inspections, okay? Also, in addition to the inspections, you have to pay for the appraisal fee. That is definitely a cost to the buyer. Now, keep in mind, there are certain fees that are determined based on where you live.
Okay.
So maybe in San Joaquin County, the seller pays for, say, for instance, the buyers always pay the appraisal fee, but the seller may pay the county transfer fee or whatever.
Okay.
And then when you go to Marina County, the buyer might be responsible for that. So you just need to know which, based on the counties, what the seller is typically responsible for versus what the buyers are responsible for. However, those fees are negotiable. Some fees are negotiable.
Okay.
Okay. So the seller might be like, no, I'm not paying for the county transfer fee because I have somebody who's willing to pay cash and pay for everything. So they might decline to pay, and they can send in a addendum and say, hey, I want to change that. I don't want to pay that.
So in inspections too, since we're talking about that, typically the two that comes to my mind is pest inspections and roof inspections.
Home inspections as well.
So are those fees, do they fluctuate or what is it typically?
So typically an inspection fee runs about like $200 to $300. So it just depends again where you live, and they can charge whatever they want. I mean, within the ballpark, right? But typically that's how much. For appraisal, the appraisal fees have been increased. I've seen appraisal fees at $550. I think the lowest I've seen recently was about $480, $450. So maybe about in the $400, $600 range for appraisal, depending on where you are located. Now, I've sold a property up in Marina County. Obviously, they're much higher than San Joaquin County.
Right, correct. So based on where you live. Okay, so now you're going through this, you're getting at, now the people are, they're out in the hunt. You're seeing so much in the news. You always hear people talking about real estate, whether it's like a seller's market, a buyer's market, those type of things. Like, what's the comfort in knowing? Because, you get some of these people that are say, like, I want to purchase a home and I may only want to be there a year or two and then flip it because someone has told them that this is a great way to acquire assets and make money.
Absolutely.
But if you're just trying to tell someone for their first time, like, are these things that they should be thinking about, or should they just be looking for the home that fits their needs and their comfort?
So it just depends on where they are. Some people are older already and just want to find a home where they're not paying somebody else's mortgage and they want to pay them their own mortgage. So they're not really worried about the investment part because they're already, at a place where they just want the comfort, right? Whereas you have others that might want to use this as a stepping stone and build and create generational wealth. So it just depends on where the buyer is. If they are at a place where they do want to build wealth, then I definitely would say that location is everything, right? You can pay to have your house upgraded, but you can't pay for where you live. So keeping that in mind, like if you buy in a neighborhood where the location is a high value area, right? You buy the lowest house on the market, you go ahead and fix that up. Guess what? Your equity shoots up much higher than you would if you bought a house already at a high market value. And the neighborhood, the value is not that high on the, you know what I mean? So you got to factor in those type of scenarios.
So if there's mothers out there, there's families and things like that, do you get a lot of buyers that are concerned with, like, are they asking questions or like, what school district is over there? What's the, how locations as far as like traveling? Are there freeways in the area? What are like some key points for you if you were telling someone like, hey, this fits your lifestyle? Like, what should you look for in a neighborhood?
So obviously, if you're a commuter, you want to be close to the freeways, right? If you have kids, you want to be in good school districts, right? And then depending on the age of your kids, you might want a backyard. You might need 2 bathrooms. Like I cannot live with one bathroom because I'm not sharing my bathroom with my kids,
Yeah.
So it's just up to the individual. And it's just catered to each person. You might have somebody who's just starting out. I have a client right now, we're getting ready to close, and she is moving out of her parents' house. She want to start fresh, but she didn't want to start by paying somebody else's mortgage. She was like, I want to start and I just want to build now. And so she started off with a mobile home, but it's a nice mobile home in a nice area, but it fits for her, right? She's not really worried about a backyard. She doesn't have kids, but it also will allow her to gain, because once she sell her mobile home, it's likely that she will have equity and more value in her home, to where when she sell it, she could take some of those proceeds and put it towards something better.
Okay, cool. So now we're starting there with the mobile home. So then there's a lot of people that are going to identify with. Right now, you are living in an apartment, and maybe that space is adequate to your lifestyle. So there's these individuals that want to get like a condo. So now they own something similar to the size of the living space they're in currently. But then there's something called HOA. For people that haven't experienced that, like, what determines that, and what are the benefits of having HOAs?
So the benefits of having HOA is that you don't have to worry about your neighborhood looking tacky, and people are held accountable for keeping their yard up to date. You won't have a lot of people parking in front of your house and things like that. So they keep everything regulated in your area. However, you also have somebody still telling you what to do with your property. So, and then when people are buying HOAs, right, especially when you are already at your purchase limit, right? So when you go and you get pre-qualified, they'll tell you exactly how much you're pre-qualified for based on your worth history, the amount you have in your bank, your 401k, and all those things, right? So once you know that purchase price and you go out and purchase, typically we looking for homes that are right at that peak, right?
Right.
It's usually, a lot of people are not coming in and going 100,000 underneath what they were approved for, right? So you're already at that peak. So when you go and you find a property that has HOAs, you have to factor that into your mortgage payment, because that will sometimes put you over, right? So if you see a home that you like, say you're approved at 390, right? And you go find this home and the home is 390, and you're like, well, I like this home, but then it has homeowners association fees. Well, guess what? If you add that on to what it already is, now you're over, because the homeowners association fees, I've seen them vary from $30 a month to $400 and $500 a month.
And I've seen this.
So it just depends on, but you definitely got to keep that in mind. And then at this point in time, a lot of people don't want to pay homeowners association fees because they don't want nobody telling them what to do with their property.
Very true. And we're all our own individuals, so we like to do what's best for us. Exactly. Now we're at this point. So I'm someone, or there's someone out there that has just been approved. They know where they're at as far as what they want. What should they look forward to in the type of agent that they want to work with to find their first home?
You definitely want somebody who's in tune and who's listening to what it is that you want. A lot of times I've seen some amazing realtors, and I've seen some who just want to get a sale. And so for me, it was important that I had somebody that was trustworthy, and it's important for me to be somebody that's trustworthy to my clients. I know my experience with my realtor, she was super cool, but once, as the time went on, you could tell she was just eager to get the sale, because we had been working for a year already looking for properties, but I kept getting outbidded. And so when we finally got to this property, it was some things that weren't quite disclosed, right? So you want realtors that'll be honest with you, but also let you know the options and what you have available to you so that you can overcome, or if this just won't be a good fit. I don't want to have somebody put me in a home where after we seal the deal, now I have all these extra issues coming up, whether it's the roof or whether the toilet about to cave in because my realtor didn't disclose certain things that needed to be disclosed to me so I can better prepare. You want people that's going to definitely look out for your best interest. And you can tell, sometimes you probably can't tell, but for the most part, you can tell when you're asking a question. And if they seem like they're bothered or like, oh, I already told you, that's kind of a red flag.
Okay. So the relationship and the rapport between you and the realtor. Okay, yeah, because this is a big purchase. It's a life-changing event for people like that. So we go through this. We're getting the claims. We're getting to the point where we're closing the home. There's insurance. There's different things. Like being a homeowner, now that someone's in their first home, like from your own experience, what's your first year in your home like?
Ooh, painting. Unless they painted already.
Yeah.
I've seen where sellers, like, it just depends on the seller that you are working with. I've seen where sellers will paint the house for you, which is nice. But it's all about, like, I have a client, he just closed, and his thing, he was like, I'm switching the floors out. So it's just getting it prepared to your liking before you get in the home. But it's also learning about the home warranty. That's an extra fee. A home warranty is, and that's a negotiable fee, whether the seller pays or the buyer pays, right? So a home warranty covers, like, if say there's a plumbing issue, you might have to pay $75 down payment to the home warranty, and they'll send a plumber out, and they'll take care of the rest of the cost. So, because we know plumbing can be expensive, right?
Correct.
If you're paying out of pocket. So it's different things like that to keep you covered. That's separate from your homeowner's insurance.
Okay. And now when you're saying homeowners insurance, now what are we looking at?
So homeowners insurance, when you're FHA, that's included in your mortgage. So you don't have to worry about that price.
Okay, so that goes into, I think I've heard, and you can correct me if I'm wrong, with the FHA, that is backed by insurance, right? The money, the loans, and everything else, where with the conventional loan, the money is totally different, right?
Yeah. So with conventional, the homeowner's insurance is not included in the mortgage payment unless you want it to factor in. But typically, that's the benefit of having a conventional loan. You can choose who you want as your mortgage insurance, how much you want to pay, or however you choose to go about it that way. But with FHA, you have to have it factor in, because that secures, that gives the lender peace of mind, knowing that even if they tear up this property or the property is tore up and they can't pay for it, there's insurance on it to cover whatever damages. So it's like, because they're still owners of the home, right? They still have stake in the home. So they want to make sure that what they're putting in is secured.
So for the individuals that may be into like stacking properties or getting into, like you said, as investments and things like that, I've heard that you have to be in your home a year before you can actually rent it out.
Yes.
Is that something across the nation, or is that just here in California?
That's across the nation. So when you, especially with FHA, you have to be not necessarily conventional, right? But and that's the thing with conventional, you have a lot more leeway. With FHA, you have to be residential, and even conventional in some instances, it just depends on what you're trying to do. But when you come in as an investor, you're definitely going to come in paying more interest. That's something that you have to keep in mind as well. So that's why people will say, no, I'd rather just stay here for a year and then turn it into an investment properties and move that way.
Okay, perfect. Tasha, if we're talking to everybody out there right now, whether it's 2, 3, 4, 5 things that can come to mind for you, if you can sit here and just lay out a list for everybody and let them know what you would do to get your first home, what would that be?
So first, for me, I would try and get my credit score as high as I can, at least set 720. And that's just for me, because I would rather have the lowest interest rate. And right now, interest rates are as lower than they've ever been. And so to take advantage of that, because that changes your monthly payments tremendously. So if you can get your credit score as high as you can before coming to the table, making sure you have some savings in the bank to cover your down payment and your closing costs, because those are two different amounts. The down payment is typically about 3.5 for FHA. It could be 25. It could be up from 3% to 20% for conventional. And then it also can be and then also the closing cost is included, and the closing cost is typically 3%. You also, like we spoke about earlier, is the other fees. You have to have money for your appraisal. You have to have money to pay for the inspection. So it's quite a bit of money that you need to bring to the table. However, if you don't have that amount, you can always look into the down payment assistance programs. And there's a number of different programs that can help you with your closing costs. They have lender credits, where the lender can actually give the buyer a credit to help with their closing costs. So there's different methods. Make sure you talk to your realtor, make sure you ask questions, and try and get all the assistance you needed to help you be able to get in a position to buy a home and affordably. Another thing that I would encourage my clients is to not focus so much on the what do they call it? The makeup of the home. Like if the walls is not perfectly painted or things like that, just the basic things of the home. Focus more on the location, the space, because everything else can be adjusted and changed. And as you build equity, you could take the equity out and put it back in the home, increasing the value of your home. Or you can, if you're looking to invest eventually, you can just do the minimal amount of repairs, take it and rent it out. You don't have to necessarily go change the bathroom and things like that if that's not a place where you're trying to stay. Those are some of the key points that I would definitely keep in mind when purchasing a home. And if it's something you want and you know that's what you want, don't budge. Stick to it. It may take you longer to get there, but and then my most important thing that I would tell you is to be patient, especially in this market. It is a seller's market, so buyers are constantly getting outbidded, but that does not mean that your home and the home that you're looking for with the qualities and the criteria that you want in your home is not out there. It just may take a little longer for you to find it. It took me a whole year for me to find the property that I want, and it still wasn't everything that I wanted, but today it is.
Oh, that's amazing. You guys, first, Sasha, I want to thank you
For
doing this for me and doing this for everybody that's watching out there. This is a very candid conversation for us. And so this gives you guys an opportunity because of social media that down here in the comments that you guys can actually educate each other. And if there's some things we missed or possibly made a mistake on, this is a time for you guys to inform us too. So the next time we do something like this, we can make sure that information aligns more with what's realistic and what's current to date. Because we do know like laws, policies, things change all the time. And like I said, if we miss something, take this time to conversate and join the community of like helping other people get into their first home. Yes. Again, I'm Shelly. This is Natasha Bass, and I appreciate you guys for spending a little time with us. I hope you learned something. And if not, we'll be looking forward to reading your comments and learning from you. Thank you.
Most definitely. Thanks for having me, Shelly.
You're welcome.
Appreciate it. Peace out.
Thank you guys again for watching this episode brought to you by Sussex. Natasha Bass is an incredible woman, beautiful on the outside and the inside, and she means a lot to me, and I want her to mean a lot to you guys. But seriously though, I'm gonna put all her information below so you guys can reach out to her personally. So if you have more questions related to like real estate and what it takes to get into your first home, or maybe you're just trying to get your second home, I personally don't know. I learned a lot. I hope you guys learned something. If not, there's some conversations you can start below and I'll chime in when I can. But hey, next week, I got an incredible woman out in Monterey, Carmel area, which I'm looking forward to going to because I'm trying to eat good. I'm trying to chill on the beach, and I'm trying to be in way better weather than I'm at right now because here in Stockton, California, it is hot. But until then, follow us on social media and please check out the website. We've been working really hard. We got some great fitness and leisure apparel for you ladies and more to come as we grow. So until then, I'm Shelly, and this has been brought to you by Sussex.